Reynolds Team here in Vero Beach. With me today, I have John Pennington from LendUMortgage up in the Cocoa or Brevard area.
Yep,
local lender. What we wanted to talk about today is a little bit of where the market is, where the lending is, what the interest rates are, what some predictions are, and some really great new loan products that you have to talk to us about. So, John, what are the current interest rates like right now?
Great, Michelle. Thanks for introducing me. John Pennington with LendUMortgage. We're powered by New American Funding. So let's talk interest rates, right? It's an ever-changing percentage, right? In fact, whatever I say today is probably going to change in the next 10 minutes. But really, rates right now are somewhere in that 6 3/4 to 7 1/4, really depending upon what's happening in the market. Right. So that's kind of where we've been sitting for the last couple weeks. And a lot is just depending upon what's happening in the market, what's driving interest rates, what's happening with the Federal Reserve. But currently, that's where we're sort of sitting, is in the high 6s and low 7s.
Now, you've lived through, the crash, et cetera. I was not a real estate agent, but I had a house during the crash. But I also, before all that, a 6% interest rate is traditionally not a horrible interest rate.
No, I bought my first home in 1995, and rates were almost 9%.
I think I paid 10 for my first one.
Yeah, 8 7/8 is what we paid for our home up in Virginia. And so historically, these still are not bad interest rates, to be honest. I know we got used to hearing the 3s, or even some people in the 2s, but those 3s and 4s. But right now, that's just where we're sitting, which is technically a sort of a normal rate. Hopefully rates come back down, but we can talk about that a little bit later.
Well, when you look at predictions, a 6% interest rate, like we said, historically is actually a good percent.
Yep.
I think the 2s and the 3s were somewhat artificial, were they not?
They definitely were. Yeah, based upon what was going on with COVID and what they were trying to do to help the economy at that time.
Right.
Yeah.
So if we ever saw another 4 again, that would probably be remarkable.
Absolutely. Okay. Yeah. If for those folks that are buying right now, we sort of have a saying: love the house, marry the house, just don't marry the interest rate, because you're probably going to be refinancing.
Marry the house, date the rate.
Date the rate, yeah, for sure.
Right. So everybody comes to me all the time and says, oh, the interest rates, and I'm just going to wait for the market to crash like it did in 2008. I tell them my thing, obviously there's no reason for it to crash, but let's hear from someone who actually lived through that crash as a mortgage broker and why we're not going to see another crash.
Yeah. Take me back to that time, which was not a good time, 2008. I owned a mortgage company at that time, and those were difficult times. And, there's been a complete reform within the industry to prohibit a major crash like that from happening again. There's a lot of bad loans that were written at that time. People were in a lot of adjustable rate mortgages with subprime lending.
The 125% mortgage.
125, absolutely. Yeah. The negative amortization loans, where people were picking their payment based upon an interest rate. And so, those were just more difficult times. And so we've gotten away from those types of loans. So for that reason, we don't see anything like what happened in 2008. In fact, I think a lot of people thought that housing and the prices would start to dip this year. Hasn't happened.
Not really.
It's Econ 101. It's supply and demand. And there's still not a lot of supply out there, but the demand is still there, which is keeping pricing where it's at.
Millennials are now starting to buy, and they're the biggest generation out there.
They have a chance, right? So if we think about it, it was just 2 years ago, maybe even less than that, maybe 18 months ago, when there was still a lot of bidding going on. You were competing with a lot of investors, cash buyers, and you had to bid way over to have a chance. And first-time home buyers, it was really, really difficult. They didn't have equity from the sale of a home.
Right.
And so they were sort of using all their cash to try to get into a house. That's why right now is such a great time for those folks that are looking to buy. because they have a chance.
Right. They actually do have a chance.
They have a chance right now.
It's still a tight market, though.
Definitely.
I mean, we don't have enough inventory for the people who are looking, but we also have some fence sitters because of the rates and some of the misinformation out there. I mean, every time you turn on the news or read an article on Facebook or anything, the misinformation is out there. So it's part of the reason we're doing today. What we're doing is to let people know that, there is a lot of misinformation out there and that this is still a good time to buy a house.
Yep. So, in saying that, I would say you have the opportunity to negotiate, which really helps me talk about this particular program.
Yep.
For example, if you haven't heard about it, it's called a 2-1 buy down. They even have a 3-1 buy down. But I brought basically a chart of information that kind of lets a buyer know how does that help me? Well, we just said, let's say rates are 6.75. In a 2-1 buy down situation, you ask for a seller concession.
Right.
And I'm going to use a $400,000 purchase price FHA loan. Okay. To use the illustration. With an FHA, you only need 3.5% down. And the rest of the funds can come from seller concessions. Now, depending upon the home, obviously will determine how much seller concessions you can get, right? If it's multiple bid situation, it may be a little difficult, but property's been sitting for just a little bit, you might have a chance. And I know you do a great job of negotiating with your seller. So, but in this situation, the seller would end up giving the credit to help lower the interest rate during the first 2 years. Right. So an example is the payment would be nearly $500. It's $498 less every month for the first 12 months. So you're effectively getting a 4.75% interest rate year one, right? A 5.75% interest rate year two, and saving $255. And then year 3 and beyond, you go back to the 6 3/4 rate. Now, at any point, you can refinance. So if rates end up dropping for some reason during those first 2 years, you can refinance to what that current market is. And the great thing is the money that the seller has given as a concession sits in sort of like a lender's escrow type of account. Okay. They never lose that. Right. So let's say halfway in between, the total concession is $9,000 that the seller's giving in this example. And after year 1, they've got to take advantage of that 2% lower interest rate. And now rates drop 2% for some reason, right? Let's just say they go to 4 3/4. Well, you refinance that you've used almost $6,000 in seller concession, but there's still $3,000 left. You don't lose those monies. They actually come off the principal balance when you go to refinance. Nice. So you still continue to get that seller credit that was given to you initially. Great. So it's just a great program. It allows for that lower payment during those first 2 years. Right. Maybe when somebody's just starting to buy their first house and still building on their career and anticipating maybe a little bit more income as the time goes. Right. Okay. Absolutely. Great. Yep. Pre-qualifying in today's market. Pre-qualifying in any market is critical, but definitely today's market. Yeah. I've been around this industry a long time, got in it in the late 90s. And what I can tell you is it's really key for your loan advisor to look at your full file. They really need to vet out what's going on with your income, if you're hourly, if you have shift differentials, if you've changed careers. All of those things make a difference with what's going to happen with your pre-approval. We need to review your assets. We look at bank statements, not just what's in the account, but how did you get to there? Right. Are there little payments that we don't know about? And I've been doing this a long time, so I know what to look at a file so that we don't get under contract and then a red flag comes up. Right. So we really want to try to get that person pre-qualified. We can actually even submit them to underwriting and have a full underwritten file prior to going under contract. And sellers really like to see that.
I was just going to say, and that is makes you a much more competitive offer.
Absolutely.
You're not just the worry out of
you're
it.
not just a pre-approved. You're actually underwritten approved.
Right.
And I love telling listing agents that my buyers are that. And it really does, like you said, it makes a difference.
Yeah, it takes the worry out of, well, when we're going to get there, or what's the financing contingency going to do?
Absolutely.
Yep. Great.
Yep.
So I understand you have some special loan products that have recently come out that I think everybody's going to be excited to hear about, especially in, a competitive market, because of the lack of inventory, we are still competitive with certain price points. But also, with the interest rates being higher than we're recently accustomed to, making them more affordable. So I'm going to let you jump right in and tell us some of these cool ones.
Yeah. So the one that I'd like to talk about today is a program called NAF Cash. Mm-hmm. NAF Cash is an affiliate of New American Funding. And what it allows a borrower to do, two different types of borrowers. So you have your borrower that needs to sell their home.
Right.
So that borrower needs to sell their home to be able to purchase their next home. Mm-hmm. It allows them to not have to sell their home.
Right.
And not have to have a contingent offer. And it allows them to buy their new home and then sell their house.
Okay.
So because when they buy the home, it's actually being bought by NAF Cash in cash.
Okay.
So that's the first type of buyers. The one that has to sell their home, NAF Cash will actually pay cash for the new home that they're buying and then allow them to sell that house.
Okay.
And then you have, like you mentioned, that buyer that doesn't have a home to sell, that's a first-time home buyer. Mm-hmm. It's a competitive market. How do you compete with cash buyers? You become a cash buyer yourself using the NAF Cash program. Okay. Essentially, it's 5 easy steps. The first one is you get pre-approved. So you actually go through the underwriting process. Mm-hmm. You find your home. NAF Cash essentially then pays cash for that home. Mm-hmm. You move into that home, and then you buy the home back from NAF Cash at the same contract price that it was purchased for.
Right.
So it allows you to become that cash buyer. There's a small fee associated with that for doing that.
Right.
But when you think about it, becoming a cash buyer allows you to be super competitive, and you may not have to bid way over when you're a cash buyer. Right. It allows you to have a little bit more negotiations. We just saw this on a contract where the buyer was up against a cash buyer, and they bid $10,000 over asking price
to try and get it.
To try to get it. The seller accepted a cash offer that was $40,000 below.
Because it was cash.
Because it was
and
cash.
There was no questions.
There was no questions. They could close quickly.
Yep.
And he accepted a $50,000 difference from $10,000 over to $40,000 below because it was cash.
Right.
So, you can take that into consideration too when you become a cash buyer using our NAF Cash program.
So the NAF Cash program, can they do a quick close?
They absolutely can. Okay, it closes just like a cash buyer. They close within a couple of weeks.
Fantastic. Yep. Yeah, it does make you a whole lot more competitive.
Yeah.
Especially on a house that's vacant.
Yep.
Yep.
For sure.
Yeah. No, it's fantastic. So what else do you have for me?
We have programs that are your standard program, right? Mm-hmm. So at LendUMortgage, we process, we underwrite, we fund everything in-house. We actually service our mortgages too. So we service about 99% of all the mortgages that we close.
Great.
Meaning that you actually make your payment to New American Funding. And
so it doesn't get sold off
to another
bank, then another bank, and then another bank.
Right.
So by the fourth month, you've got 4 different mortgages.
Correct.
Yeah.
The other thing that's important about that too is, when you go to refinance, we're already holding the servicing of it. So we're going to save you some money on that. We'll talk about one of our guarantees in a second, but it'll save you some money also because you're not going to have to re-escrow. Right. Because we're already holding that mortgage servicing.
Okay.
But those are your conventional loans. So Fannie, Freddie, conventional financing, FHA, VA, USDA, we offer all of that, right?
Right.
But then we also have the non-typical type of mortgage, we'll call it a non-QM.
Yeah.
Those are your mortgages where someone needs a little bit of creative financing.
Right.
They may be self-employed and they make great money. They just write everything off.
Right.
So they don't show that. So how can you qualify for a $1 million home when you show that to the IRS that you make $50,000, right?
Yep.
Well, the way around that is we have bank statement loans where we can derive income from bank statements. We have a P&L loan that is actually just a profit and loss statement that's given by your CPA, where we can derive income. You might be a high net worth an asset individual, so you've got a lot of assets. We can actually derive income from the assets that are in your bank account and amortize those assets to come up with a monthly number for income. So we have no doc loans. We have private money, hard money loans. So there's really not a mortgage out there that we can't do, because in this market, you have to be competitive. You have to have not only the standard products, which we have like all lenders, but we also have those out of the ordinary, out of the box thinking type of products as well. And I specialize in that and do a lot of those types of non-typical mortgages. So it really helps that buyer that needs those types of programs.
For those buyers who think that they can't qualify.
Correct.
I think it's really important for everybody to know that there is probably a mortgage out there for you. It's just a matter of where you're looking and who you're talking to.
Correct. Yep.
Absolutely. Okay. Homes that need repairs.
Yep. So there are programs out there where FHA and conventional financing that allow for rehabs of the home. So we have those types of programs. We could actually also do that as a construction loan as well. So we have construction financing for conventional and VA.
Okay.
So those are great products that we can either do a rehab or we can go from the ground all the way up. So we have that product in-house as well. Yep.
See? So all those ugly houses out there.
Yep, for sure.
They have a chance.
They do have a chance.
They have a chance.
Yep.
All right. And actually some of those are an opportunity to for a first-time home buyer or maybe not so high of an income buyer to get a decent house that's just needing a little love. Little
TLC on it, for sure.
Just a little love.
Yeah. We offer that. We offer the jumbo products as well. Have some great in-house jumbo financing. We just saw that for those first-time home buyers, we had the Hometown Heroes program.
Yeah, it just ran out.
We don't know. They're saying they don't know when those funds are going to be released. But this is where, if you're ready and you have your everything in order, we don't know when it's coming. But you want to be in a position to be able to jump on it, to jump on those. $100 million was spent from July 1st until about last week.
Wow.
So in about 7 weeks, $100 million was given out in down payment assistance through Hometown Heroes. Wow. It was quite remarkable. So,
are there other programs that are, say, like a no down payment situation?
There are. So we have the Chenoa product, which is another down payment assistance program. We have a product in home called the Pathway 100, which is another down payment. So you don't need any funds to get into a home. So, there's some qualifications that have to occur with that. But, if you're in a situation where you're trying to purchase a home, you may not have all the funds available. You can't get the seller credit. You can't get a gift from a family member. Then there are some down payment assistance programs out there for people.
Great.
Yep.
Cool.
So,
anything else that's out there that's well, let's talk about the refinancing.
Yeah,
so you've got yourself a nice 6.75%, but next year it drops to 5%.
Yep. So we offer a 5-year protection pledge, which basically just means that if you refinance within that 5-year period from the time that you close, we will waive lender fees and appraisal fees on the refinance. Again, that can save you nearly $1,000 or more, depending upon the type of appraisal that's required. And again, as I mentioned, because we service our loans, not having to re-escrow, the potential for that can be thousands of dollars depending upon where you're at. Taxes are due here in Florida right in November. So, if you're refinancing right now in August, September timeframe, you're looking at almost 12 months that you're going to have to escrow. Well, that's, depending upon the home, that's $4,000, $5,000, $6,000
right now.
And you wouldn't have to do that with us. So that's adding that amount back onto your mortgage.
Right.
Yeah, that's great.
That's great. All right. Well, thank you for coming in.
Absolutely.
It was an absolute pleasure. And if anybody has any questions, we're going to make sure that your information is below.
Thank you so much.
Yours and mine. So if anybody would like an introduction to John, I will be more than happy to accommodate. Please, by all means, if you guys have any questions, let us know. And thank you for coming in today.
Absolutely. Been a pleasure. Thank you.
Thanks.